Still wouldn't have been in a trade here. Hi everyone, as requested, today we're going to continue a new point of interest, some training. We're going to back test the day after the last day on the same pair, just so there's no real gaps in the data. Black candle, white candle, so we're going to mark off doing pretty well. Black candle so far, so congratulations. Range. Hang on, stop that up, go to the 28th. Now, if you haven't seen our first video, this will make absolutely no sense. I'm going to leave a link in the description. But again, if you don't understand the core concept of what we're looking at, it will be a struggle for you. Now, here we've got market open, 0 o'clock. You don't want to be doing anything until at the very least you've got Sydney and Japan stock markets opening. Stock markets, bonds, commodities, foreign exchange are all interconnected. That's a much more advanced topic, but right now it's like a dead zone. If the stock markets aren't running, don't take the trade, okay? Remember, the whole game is about facilitating international trade. If stock markets aren't open, businesses aren't doing business, you are trading against the best of the best in the market. When there's no liquidity or no volume in the market, the big boys come in and balance their books very aggressively. So don't try and compete against them. They'll smash you every time. Eventually you can, but I just wouldn't make it a focus at the moment. Typically I trade 2 hours of Asia and 2 hours of London. And the reason I do that is just for lifestyle choices. In my part of the world, it's way too late to be trading New York. And if you don't have to, you shouldn't. Always remember what the focus is of your trading journey is generally, without getting too wise, trying to make a lot of money when I'm not putting in a huge amount of effort. So it's all about enjoying your life. So we've still got an hour to go before open. If I fast forward this too much, it skips a lot of candles. So I apologize. This will be a little bit on the boring side for many people, but unfortunately, we have to go through this to ensure we understand what it is we're trying to do. So it's not really for entertainment. This is really for educational purposes, this particular video. And there's no Lamborghinis in this particular production. Still half an hour to go. For the purpose of this video, again, we're only trading US dollar pairs, and I want to keep it short a time frame as possible. The reason we're doing that is because most of you are on prop firms, and despite what people say, shorter term time frames allows you to put on enough size to really pass a challenge without too many dramas. And also too, this is the hardest form of trading. Once you understand this, the shortest possible time frames, well then virtually any time frame is walk in the park. So quick recap, what's the market trying to do? We are only looking at the black candles. We want a body close of this black candle into the body close of this black candle to ensure that this market is complete. If you go back to our first video, the bank is trying to get the deals away for Toyota. This position has opened up. He's getting his orders away, but he needs to close his book off. So the price should come back to this particular point right here. As we go through more examples, this will become evident, and I'll give you a specific, relatively safe setup. As you get more skilled in this, you can trade all sorts of things because you don't need to necessarily wait for certain confirmations, but we're going to be very mechanical here on what we're going to do, just until you guys really start to get good at it, and then you can unleash a little bit, do what you want. Here we've got 15 minutes to open. Now, it's pretty rare that on open, as I said, all of the pre-market players are sitting there doing their business. Pretty rare that this isn't going to close out before open, because no one likes to start the day on a bad foot when trade comes in. So this is all broker and interbank activity, but we're going to definitely come back to this point. Now, I would probably be looking to get into a trade here, but it's not clear enough under what we're going to be doing today. So we'll let this one go through the keepers. And where does it come back to? Might make a fool of me. Lovely. So at that point here, this body closed within the body of this black candle. So this is closed. Everybody's books balanced. Everybody's just in the process of a normal day getting their transactions across. Stop thinking of it as trades. They're transactions at a banking level. They're simply executing transactions. Where's our new point of interest? Well, here we have a white candle. Here we have a black candle. We are going to draw this line at the bottom of the black candle, because for this move to be completed, we'll have to go back into that zone. Now, we don't know when that will occur, but we know that at some point it's going to occur. So here we are, 5 minutes into open. It is Asia, but not a whole lot of stuff going on. Still playing within the ranges. Broke out of the range. That's pretty good. Where's our new point of interest? White candle, black candle, bottom of the black candle. We'll just put a line there. Now we have two areas to fill, one there and one there. We'll fill it on this candle. Maybe I was too quick. Okay, filling out the range. I didn't want to leave that one too long. Get rid of that line now. Where's our new point of interest? Black candle, white candle. So we're going to mark off the top of this previous black candle. This becomes our range. Now, as a game, once you get more skilled, you'll be taking those little quick mini scalps, but you need a fair bit of practice for that. That can now go. Now, this little move here that we originally drew in, black candle, body, black candle, looks as though we're forming that particular structure again. Black candle, push up. Probably come back down and clear this range. Now, at this point, we've got 25 minutes before China and Hong Kong open. So again, before that market opens, people don't want to have risk on their books. When markets open, they try and de-risk everything. Okay, they try and really get themselves in a position where they're flat. So it's pretty rare. Again, here we came in, we had Sydney open. No one wants to be taking risks, close off the position. Now we're coming into Hong Kong, China open, still 15 minutes to go, but realistically, I'm probably going to close this position out too. Would I take this trade? Yes. Every day of the week. I'm not taking it here because it's not following the specific criteria I want you guys to follow, but eventually you'll be taking these trades every morning. And think about it. Here you've got a big set of markets coming on. You've got the Chinese resetting the value of the yuan. So there's a lot of risk. No dealer wants to have a lot of risk on coming into open. Here you go, 5 minutes to open. And where did we go to? Well, right back to our spot. Haven't had a body close through here yet, so it's still technically open. But you can see that's just a function of people not wanting to take a lot of risk. Where's our new points of interest? White candle, black candle. I'm going to mark off the base of this black candle. And don't worry, guys, I promise you we'll take some trades. It's just, we have to wait for the right thing. The other thing too is pretty soon I expect you all to be looking at all US dollar pairs at once. So if there's nothing going on in the yen, you sit there and you might take a trade on the pound or the Aussie or the euro or whatever. You do get an awful lot of trades. And this is starting to get a little bit interesting to me. You just watch what happens here. Okay, this is now interesting. Here we've got a range, here we've got a range. We haven't technically closed it out. Here we've had a push up. So the dealers are trying to balance themselves from this trade. They've had a push up and it's failed. Then we had a black candle, okay? Now, if you're in a position with this book, you don't sit there and say, I'm just going to throw more money into it until it gets back to my position. You just sit on your hands. You can, as a dealer, you can hedge out, you can do whatever you want, but you're just basically waiting for things to go into your range. So depending on what happens here, on where we break, here we've had a push up, here we've had a black candle. If we get a push below this candle, right, we'll probably take a short. Now, where would my stops be? If you're an aggressive trader, and I say, and even that, by that I mean, let's say you've done this thousands of times and you have a whole level of comfort that, yes, statistically, the odds are very, very much stacked in your favor. You put your stop loss here. If you're really new to it and you're a bit concerned, reduce your lot sizes and put your stop up here. But once you do 30, 40, 50, 60 trades and you're getting 80, 90% of them correct, you'd probably be more aggressive with your stops because you really don't care if you get stopped out. I mean, if I take this trade now, it's a 4-pip stop. I'll probably let it break a little bit more. And there you go. Now we've broken the zone. I've got a 5-lot contract going on here on a 50,000 account. 3-pip stop, so really my risk is what, like $150. Currently up 4 pips. That's 1-1. Well, it's not 1-1 yet, but now where's it going? Look, it's going to take out this load for sure. We'll do a whole other video on stops. It gets a little bit more detailed. And you go 5.5. So I risked 4 pips, made 5.5. Happy days. And now where's our points of interest? That's our point of interest. Here, you had a body close into the body close. So technically, we're not as interested in that zone. I do expect it to get tested at some point, but that's a lesson for another day. So there you go. We could have held it for even more. A lot of people take partials. I've never really found taking partials to be mathematically in my interest, so I tend not to do it. Sometimes I'll leave a runner going, but to be honest with you, the probabilities and the maths of the game change significantly, and I know people will do that. I don't say it's necessarily a bad thing, but I've found I make more money just by banking my profits and going on with my day. So there you go. Hour and a half into the market. We're already up. What are we up? We're already up $170. Now we have a point of interest. Black candle, white candle. We mark off the top of the body of this particular candle. Let me see what happens. Get rid of these stops now because they're a bit confusing. Here we're coming up to which sort of was a point of interest, but not technically a point of interest. So that you'll see we'll probably react straight off that. And even if we're not doing a whole lot of things, you can at least see how these markets react to these points over and over and over and over and over again. And now I'm starting to get a bit of interest. But we are waiting for the candle closes. Okay, why is this interesting? Here we have a black candle. Here we have a black candle. The body of this black candle could not fill into the body of this black candle. So this position is offside. We have points of liquidity up here. And we have a break above. So we're going to take a long. Where would our stop be? We're super aggressive. We put it here, which is eventually what you'll all do, I'm assuming. If you're a little more nervous, put it at the bottom of the swing. Only practice will tell you where you want to do that, because that's really a personal risk consideration. But because you've got this push, this candle probably shouldn't break. Again, it's a very small stop. Where's our next point of interest? Now, as you're watching this form, you should see this happen over and over and over and over and over again. So you've got break, break, body, body. Sorry, the body of this candle. Now we're seeing, can the body of this candle pull into this candle? And as you can see, we don't. Now this is Asia, so you can't expect 50 pip moves the whole time. London's a lot more lucrative. And yes, you can trade this in New York. Probably another 1-to-1. We'll take it. No need to be greedy. Yeah, sure, you can hold it to up here, but taking losses has a lot of psychological issues that go with it, so you're best off trying to avoid them. No need to be greedy. Look, we're already up $310, which isn't too bad on a 50K account for a few hours work. And when you consider it, both of our stops really have been about 3 or 4 pips. So we've made about 9 pips and we've risked about 7 pips. That's pretty good. What are we seeing here? Body, body. Mark that off, as you can see. Now, whenever you're seeing this is expansionary, right? When you're starting to see multiple candles where these black bodies can't pull in, you should never be looking for short. It's going to keep going up. Now, the more gaps that you see, the probability of it continuing start to reduce somewhat. So you've got to be a little bit careful. You don't want to take it 8 legs into the trade, but 1 or 2 legs in, that's when that's your sweet spot. Because every time this occurs, people are losing money. People with a lot more money than you and I are losing a lot of money. So they don't allow that to happen forever. Eventually, they're going to rebalance the position, which, as you can see, they are doing right now. So where's our next point of interest? White candle, black candle, body of the black candle. And look, I mean, you can see this is coming down and touching these pretty much to the pip. It's closing everything out. This is the cycle of the market. So that we can get rid of, because we know that the people who were offside from that position are starting to breathe a sigh of relief. And we'll wait for our next setup. You'll notice with the signals that we provide that we just do basically a one-off trade per day on a completely different market. You'll see that very similar principles apply. And this is how easy it gets to pass a prop firm. That we mark up the market, takes us about 10 minutes. We send the trades out, and it's a little less accurate because they're much longer time frames, and it's also on the US 30. But you really, it's the same principles apply. So what are we seeing now? Nothing much. Could come down here. Here we have a white candle, black candle. Let's mark off that. And you'll see as you start marking off and deleting these exact specific lines, you start to get an overview of what the market is trying to do. And also when you overlay all US dollar pairs, you start to look at things like bond markets, which we're getting very advanced, and commodity prices and the like. You get to see a very good overview of really where price is going. You'll see that it's not random at all. As long as you understand the core philosophy of what the banks are doing, it's pretty stock standard. Here we have a black body. Here we have a black body. We'll see if this can pull into this black body. Yep. Now, as I say, once you get really good, you're staring at screens all day, even that, it's a couple of pips. I'll take those 20 times a day. Once I get to 20, 25 pips, I am done. I know I'm long past staring at screens all day, and hopefully you guys will get to that point. I know when you knew it, sounds like you want to do it all day, every day, but trust me, it becomes very much like a job. Okay, what happened here? Almost missed a trade. Here's our point of interest. Our black body couldn't pull into our black body. We had a push up of a white candle and another push up. This is a point of interest. Take this by. Where would your stops go? Your stops, if you're really aggressive, would be here, more conservative down here. Where's our ranges up to these points? Either take a 1-to-1 or go for the range. Generally, if I'm up a fair bit, I'll start to sit there and play for the ranges. It's a little more interesting, and you can make a lot of return, but your goal is to pay your bills. And if you're going to pay your bills, just go take your money and get out. Lovely. What did we risk there? 6 pips. We're up about 6 pips. This is a point where I'd expect it to react, although we may go for this point. But you know what? We'll take our profit. And if you have a look at our results now, we're up just under 2%, taking very, very little risk. Any other points of interest? Yes, there is. Why? White candle, black candle, body. Again, I apologize if this one's a bit slower than most of our videos, but it's just sort of mandatory for me to do it like this. Where are we reaching for? Just a point of interest? Sure is. The guys in this position right here would be starting to get a little bit nervous, to be fair. There you go. Where do we go straight to? We tag our initial point. So the people that initiated this roll or this move are very worried down here. Now everybody's fairly happy. Okay, now guys, I'm going to try and fast forward because we're now going into Asian lunch. Missed a couple of setups there. But in Japan and Hong Kong, part of the culture, they go out and have a rather large lunch break, which means the equity markets don't act normally. They go and do business. So again, if stock markets aren't running, don't be taking trades. Now, whilst we're running this, what did we actually see here? Body, body, black body, retest, break up. Okay. At this point, came back down, went to a pit, and then went for a run up. So you probably would have made a bit of money there as well. Let's see what's going on here. We still look like we're in a fairly big uptrend. Look at all these liquidity pools forming here, where people are offside. They're not going to let that last for too long. Where are we interested? White candle, black candle, body of the black candle. Still in a large uptrend based on all of these lines we've got drawn in. Here we're going for an attempt to rebalance. We're trying to rebalance. We break here, use possible shorts down to here. If we don't break, we're just going to go and fill that liquidity area. So now we can't break this candle, so it's not looking like the shorts are on. They're testing it. Just broke it then. Possibly could have taken a short there. White candle, black candle, body of the black candle. I know this is sounding repetitive, guys, but this needs to be super repetitive to you so there's a lot of clarity with what it is that you're doing. Now, the body of this candle should close in the body of this candle or get pretty damn close to it. If it doesn't, we're going to swing and take liquidity in the other direction. There you go. Actually, that would have been a very nice short. So that was user error. I missed that one. We should have traded it. But as you can see by now, that was fairly standard. This liquidity point is now gone. Here we came down, touched it, couldn't close into it. So we'll see what happens now. So there you go. That was a great trade that we just pointed in myself there. Not much to do now. Probably be kicking stones because you missed a great trade. And getting close to coming into pre-New York. So that'll be interesting to see. Again, they'll possibly close this out. No one wants to go into New York with risk. But it couldn't. Okay. Point of interest. And down the triangle, there's absolutely before I get there. We need to have a black candle that can't form in the body of this and a push up for us to take the trade. Five minutes until pre-New York. I'm not sure if there's any news or anything. You know, the standard rules do apply. If there's news. Now, again, that's the third time we've gone into a big market open. And what's happened about 5 minutes, 4 or 5 minutes past, we've come back to close off the loop, make it an efficient position. Oh, yeah, sorry, but as I was saying, don't trade into high impact news or anything like that. It's not worth it. All right, so what have we got here? Black body, could close into the black body, could touch it. So if we get a push up here, we'll probably continue up. But we really want to see a push here. Let's take a trade where we put our stops. Look, we're coming into open, so you probably put it below this position here. I'm not liking this. So there you go. This candle here is held so far. It's back in a bit of a range. Generally, I don't trade the first few minutes of open. I like to let it settle, but you know, for the purpose of this exercise, why not? Um, okay, this one's probably taking a bit too long for my liking. Still waiting to see if this position can hold. Got a bit bored there. Again, our stop was under this particular candle. Yes, we're in a bit of profit now. A bit fast on the trigger. Should have taken it off that take profit. That was a good example just to show you that, look, sometimes trades don't immediately go your way. Where's our new point of interest? Bottom of the black candle. Probably going to go and take out this high. Still leaving all of these pools of liquidity. Our high has been taken. So now we'll see if there's something we can do to take it back down to this point of liquidity. Let's just zoom out. There you go. From a broader context, this is how the market's starting to look. You can see how your uptrends are looking. Black can't hit black, black can't hit black. Sweep liquidity, continue on, continue on. Let me tell you, the people in this position now would be rather concerned. This is where it does get stressful as a trader. You're trading as a bank, but they do have very deep pockets. See if we can get 2 more trades and then we'll call it a day. Okay, here we have white candle, black candle. So push down. We can close into the body of this candle. Let's see. You'd be having to assume this is going to start pushing up again soon. Let's see if we get a bit more support. We would have taken a little long here. As you can see, we broke above this candle. The only reason that I would probably not taking this one is because, look, we have got huge liquidity pulling through here. And look, let's be real. I miss trades all the time. You'll miss trades all the time. If you're going to back test, we might as well keep it real and just say, look, we had a setup. That's 2 now. 2 quite good ones that I've said, yeah, I'm not going to take it, but would have paid off quite nicely. We've gone through virtually every candle. You can see that there's no real adjustment. We're just trading out a whole day here. Again, look, black candle, black candle. I'm going to have to take this. Let's see. Came back, formed efficiency. Looks like what's going on here. Can't really break the body of this candle with any real conviction. Haven't had a close in it. This one might close in it. No, still can't close in it. Trying to close in it. Still can't close in it. There you go. We had our up candle. When you see that it's really trying to close into this position but can't, it's a sign that it's a fairly strong sort of market. So I'd have to go along here. Where would my stops be? Well, under this candle, because you can see that it's been trying to break into the body of this candle. That stop's way too low. So this would have to be a, maybe there. So what would our risk be? 6 pips. Still trying to close. There we did have a close. Now we're getting a little worried. Yeah, I'll at least take out the highs here, you'd think. what did we say, 6. That's over 1. Oh, there you go. That's 2 to 1. I'll tell you what, we'll take that. What are our results? 50,000. That's pretty good. So we're up 5%. So again, I know this is getting a little boring, guys. I hope you take the time to watch and practice on any day you like. Like, comment on the video. Now, let's zoom out. I'm getting this video's going a tiny bit too long. Let me zoom out. I've really got to work on my video skills here, don't I? Now I've got this huge swing up, all right? The people here, if you're at a bank, are absolutely shitting themselves at the moment. Nobody likes to see this. There's certain strategies you can deploy to hedge yourself out, but you'd be getting fairly nervous. Now, if you look at our last video, you saw that we came back and closed out that position, right? So let's forget about stops. Let's just run the rest of the day on fast forward. We're not going to go through every candle, and we're going to see what this market actually goes and does. We're now deep into the New York session. And where do you think we're coming back to? Now, I know this is backtest mode, but do you think it's an illusion? Do you think 2 days in a row we've come back to these same spots day in and day out? Okay. It's not. It's how the banking system works. If you go through this position, I'm not going to go through this one for you. But again, if you start sitting there marking off where this would have failed, here you go. You can see it here. Failed here, break here. You're coming all the way back down to your range. What happened here? Same thing, same thing, same thing. This market wants to push higher. It's been trying to push higher all day. But no one was going to leave that position unclosed. I don't know what's going to happen from here. But, oh, look at that. Came out and took our original point of liquidity. So, guys, that's pretty much it. What was our results like? Pretty good. I don't think we got too many wrong, did we? We don't even need to bother looking at that. We're not even going to count that last trade because you wouldn't really do that. But look, even if you take all of our normal trades, we still made what, $1,000. So we were never up 5%. I don't know what I was talking about. Do that for a few days and you passed. Basically, all you need to do is practice this setup. As you could probably hear in my voice, it becomes exceptionally boring after a while because there's no mystery left in the market. It's basically just a case of, it's going from one point of liquidity to the other. Please do us a favor, like and subscribe. If you want to get in contact with me, you all know how to. I think we'll call that a day. And let's do some more trades next week. Thanks, guys.